Big news from Hong Kong. Sources revealed an imminent approval for Bitcoin and Ethereum ETFs as early as next Monday. With the success of spot Bitcoin ETFs in the US, this move sparks optimism in the crypto community. Analysts anticipate a surge in Bitcoin prices, potentially reaching 100,000 within this week. Stay tuned as we monitor this exciting development. Don't forget to subscribe, like, and share, and let's start. We're starting off with just 7 days until the Bitcoin halving. Bitcoin halving clock is starting, almost a week only left as we are about to enter the last week before the halving and what awaits for us. Let's see in the next week. Bitcoin ascending triangle, and here we're looking into the one. The next stop, Satoshi took the theoretical concept of perfect money and programmed it into existence. This is why we are 15 years in and Bitcoin is at all-time high. Every fiat currency, the planetary money designed to increase in value forever. Can we all buy $21 worth of Bitcoin on the halving day? I mean, you? Can we all buy? So let's see what's going to happen if we buy all at the same time. All I'm saying is probably not many people are going to do that. Maybe some will do, but it won't do much, even if everyone who knows about Bitcoin does that. As is historically the case, Bitcoin is developing a clear reaccumulation range going into the halving. This is a range Bitcoin would likely break out from weeks after the halving, and here we could see this on this chart. Next up, Sailor when Bitcoin hits the $10 million, and I feel like that's probably what will happen, and maybe we will see the Bitcoin concert right there. Behind the numbers exposing ONS's flaved inflation metrics, think you understand inflation, think again, dive into how the British one's method is leading us all astray. Inflation metrics versus real economic signals. The UK updates its inflation basket yearly, yet this can hide the real loss of the money value. For example, if coffee prices double but are replaced in a basket by cheaper tea, the reported inflation may not reflect the true cost increase. Exclusion of major assets. Inflation stats often don't include assets like housing, and if house price skyrockets but are excluded from the inflation basket, the official rate might suggest moderate inflation even as home ownership becomes unaffordable. Ignoring the Cantillon effect, new money benefits those closest to its origin like banks and the big businesses first. For instance, if banks receive new money reducing borrowing costs, they benefit before this trickles down to the average consumer, distorting true inflation impact. Fixed baskets failure to capture touch changes. ONS basket may include DVDs but not streaming services. As consumers switch to streaming, the basket measuring DVDs is now irrelevant, failing to show the real change in consumer spending and cost. Poor adjustment for product quality. If a smartphone price remains the same but its features improve significantly, inflation measures might suggest stable prices, and it ignores that consumers are actually getting more value for the same price. Broader loss of purchasing power. Traditional measures don't fully capture the effects of monetary policy across all goods. If inflation is reported at 2%, but grocery prices have risen by 5%, people feel a pinch that the headline rate does not show, manipulating statistics in a collapsing fiat system. Governments are increasingly manipulating economic metrics like inflation to mask the destabilizing effect of a fiat monetary system receiving its last rites. Shifting the components of inflation measures can downplay real economic turmoil, offering a rosier view than reality. This manipulation obscures the true impact of monetary policy decisions and hides the real economic impact on people's daily lives. The next stop is the prior Bitcoin 4-year cycle was liquidity-driven, speculative leverage on leverage post-COVID. This cycle, Bitcoin was legitimized and crowned, and we are seeing a spot-driven flight to an immutable alternative asset class. Also, breaking news is Hong Kong gives the green light to spot Bitcoin ETFs, a seismic move that even China can't ignore. And here is the threat. Hong Kong is poised to become Asia's first city to offer spot Bitcoin exchange-traded funds, with approvals expected as early as the month. Hong Kong Bitcoin and Ethereum ETF approval is expected as soon as Monday, and here we could see all the information by Bloomberg News. Accelerated approval process. Regulators have expedited the approval process for these ETFs, signaling a faster timeline than the industry expectations. Several mainland Chinese and Hong Kong asset managers, including China Asset Management, Harvest Fund Management, and Bosera Asset Management, have submitted applications to launch a spot Bitcoin ETFs. As the Bitcoin has surged over 60% this year, reaching an all-time high of 73,803 in March, which has spurred increased interest in crypto investment products like ETFs. While cryptocurrency trading is banned in mainland China, offshore Chinese financial institutions are eager to participate in crypto asset development in Hong Kong. As China Asset Management and Harvest Fund Management Hong Kong unites, we have already received approval to manage portfolios with over 10% investment in the virtual assets and existing ETFs. Hong Kong previously approved ETFs for crypto futures in late 2022, with assets under management growing significantly since then. And the future prospects we have as a value partners, a Hong Kong-based firm is also exploring the possibility of launching a spot Bitcoin ETF, indicating continued interest and potential growth in the market. In a summary, we have that overall the approval of a spot Bitcoin ETF in Hong Kong reflects the growing acceptance and integration of crypto into traditional financial markets in a region. The next up, what do we have here? As crypto Twitter, the market is looking weak. A 15 to 25% shakeout seems likely. Whales non-stop buying Bitcoin whole year. As the only cohort that is net accumulating Bitcoin is the largest whales, 10k plus, just ahead of the Hong Kong ETF approval and the halving. A positive contrarian signal, if I had to guess, tick tock. So, as we know, Hong Kong to approve spot Bitcoin ETFs, Ethereum ETFs on Monday. So what do we have here? A recently a report from the Bloomberg suggests that Hong Kong may soon approve a spot ETFs directly investing in Bitcoin and Ethereum as two of the most prominent cryptocurrencies, and if the speculation holds true, international entities like Harvest Fund Management Co. and a collaboration between Bosera Asset Management International Co. and Hashkey Capital are expected to receive the green light to launch the spot crypto ETFs. Notably, these ETFs in Hong Kong are planned to be launched by the end of the month, pending regulatory clearance from the Securities and Futures Commission and finalizing of listing details with the Hong Kong Exchange and Clearing Ltd. Meanwhile, the report approval comes with on the heels of earlier indications that Harvest Fund Management Co. was on track to secure permission to introduce a spot Bitcoin ETF in Hong Kong. However, neither the SFC nor Harvest has offered any official comments on a matter, so we are still waiting for the approved news. Don't forget to subscribe, like, and share. See you in the next one, and peace.